So should you ape in now or should you wait for a pullback? Will there even be a pullback or is this going to be a bull trap? There are three different scenarios that we could contend with, and I have my bias and what I think is going to happen, and I'll share that with you shortly. But first and foremost, let's get straight into the charts and I'll show you why some of these altcoins are absolutely pumping, as you can see over here. So without further ado, I want to start off on the total market cap over here. You can see that it is bouncing off of what is a support line. We are generally still stuck within a major range. So range bound, anytime that prices got towards the bottom of this range, they did proceed to bounce, and we are nearing the mid-range at the moment, which means that across the board on different altcoins, you can expect some level of resistance. And that is for total. Here's total 2. It's pretty much exactly the same picture, a cleaner bounce than what the total had, which includes Bitcoin, of course. And the one that I really want to focus on over here is the altcoin Perpetuals, which look like they could have a little bit further upside than the rest. And you know that generally the typical market cycle, when you do have a bull run, not that this is a bull run, but it feels like the sentiment is that way and people are treating it as such. So as you would expect, you see Bitcoin run first, then you see a little bit of Ethereum, then you see the larger caps, those have already run. And now we start to rotate into the lower caps and the mid caps. And looking at this chart, you can see it has shown that these lower caps would just be breaking out with an upside target of the 0.618, that golden ratio. I expect it to get faded within the zone. Let me move it onto a lower time frame since I am on the 12-hour chart. Bear in mind, these moves can happen extraordinarily quick in the matter of hours to even just like a day or so. You can play out the entirety of this move, and it's almost like a pump and dump. When you're not in a bull market. In a bull market, yes, it can hold long term, but in a bear market, you want to be very, very careful when you're playing these, because that's going to be a 13-14% move, meaning those altcoins will move anywhere from about 15 to 45% over the course of this altcoin perpetual move. And what that means is that happens very, very quick, and you don't want to get caught off sides. You can either get in early, play the long side, or you can be patient and wait for weakness when it gets into the zone and then look to short those particular low cap altcoins for what I believe will be massive profits. And we'll get into the strategies of how to do that when it's relevant. I don't believe it will be relevant today, but I think maybe from tomorrow it could be. So upside target, I'll be looking at a break of this trend line over here, pushing towards the 0.5, might have a slight pullback at 2,593 points. And then you'll be targeting that 618, which is where there is a cluster of resistance over here. If I pull this back over here, I'm sure you can all agree with me. If you go like that, that whole area over here is going to be resistance. And that's where I expect most of the altcoins to meet their major horizontal zones of resistance. And then I would look to fade those. So that's just quickly touching on that. Bitcoin over here, using the volatility indicator that we have, you can see that it is slowly starting to turn up. Bollinger Bands are still squeezing. Price is currently coming into the middle Bollinger Band on the weekly over there. And we'll see if it can crack through. Even if it pushes up towards the upside over here, it's going to meet that Bollinger Band is currently at 24,000 or 23,800. And then it's going to slowly start moving down. So depending on when we hit it, it might be at around 22,500. Now, for those of you who've been watching me for quite some time, you'll know that I've outlined that 22 to 23,000 area as the main area of resistance that you need to be super cautious of when you get there. I'm not saying that you need to close your longs. I'm just saying that you need to play a defensive game when you get into those zones. And if it can crack through that, then the whole macro picture begins to change. And once that crack, if that crack happens, I shouldn't say once it happens because there's no guarantees over here. But if you see that come through, then over here I have the Heikenhashi candles for Bitcoin on a weekly chart, and I would expect that would close with a green weekly candle, and then we can start to look for potentially a couple more weeks of upside, because typically when you look at the Heikenhashi, which works out the average move or the average percentage change within those candles, so it doesn't give you necessarily live price action that you can trade off. It's more just to give you, the general trend. and it doesn't give too many false signals. If you start to get a green print over here, then you can expect there will be at least a couple of weeks of upside, and that's where the risk management comes into play. So no one really knows where the bottom is going to be. You just plan for it each time that it seems like there may be a bottom, meaning that you place your longs and you put your stop loss underneath, and most of the time it's going to get stopped out, right? So if you look at this little green section over here, let's grab a pen to make it a bit more clear for you. So if you look at these little moves over here, you could have gone long, stops underneath, you would have got stopped out, could have gone long. So it's all frustrating, but eventually you get to the point where you have a mega move to the upside, and you don't know when this type of move is going to come. So you need to give it the benefit of the doubt each time. And I did outline that on this channel to say that you need to bid at the range lows, and you always give the bulls at support the benefit of the doubt. But the more times you hit that support, the more likely it is to crack through. So moving on, let's take a look at the DXY over here. And I think this is probably, for today, I would say this is definitely the most important chart of the day. And the reason why is because this is a make or break zone for the DXY right now. So we gave the two scenarios because on this channel, we always like to outline both cases. This would have been the potential bullish case. This would have been the bearish case, which is still technically a bullish case. So let's clean that up. And what I mean by that is this is your primary zone. This 109 area is where the DXY is either going to bounce or it's going to break down. If it were to bounce, it's going to be from this main trend line anywhere between 108. It's going to be difficult to pinpoint the exact zone. So what I'm going to do is I'm going to put a circle over here. I expect the DXY, because same thing as what I just said with the bulls, you have to give the dollar bulls the benefit of the doubt that anytime they're nearing a major area of support, of which this is definitely a major area of support. You have a key horizontal here. This 108 level, by the way, is a very strong quarterly chart. If I move this onto a 3-month chart now, you'd be able to see the confluence that's happened over not just months, but years and years within the DXY. This is a key zone. Then you have a diagonal over here, which is the main momentum trend line of the DXY. And if it breaks this down, probably we're going to go straight back into risk on assets, and it could potentially be the start of a major bull run. But as it stands right now, we are coming directly into what would be support. And what are you supposed to do at support? You're supposed to buy, which means that technically you would be looking for the dollar to bounce from this zone. Now, there is something very important to also take the case of the bears over here, the dollar bears, and that would essentially be this. So if you take a look over here, we were looking for a bounce from this zone, right? We got the bounce. Then what happened over here? We made a lower high. So you have your first lower high. You also now have your first confirmed lower low. But that is not yet a trend. We need a little bit more information. At the very least, again, as I just said, expect a bounce from here. Now the question is, how high does this get? Do we fade within this region over here and make our second lower high? Or do we go straight through this area, clear, make new highs, and then all of this was just a big trap? I don't know. That's what we have to be patient and wait to see. Essentially, what this information is telling me is in the meantime, to just be a little bit more patient on my entries for long-term plays on crypto, to wait for Bitcoin to break above 23,000 and close and hold there. And probably doesn't happen quite yet, at least in my personal opinion. Anything can happen, but I don't think so. I think this is likely to bounce first. So going into the actual price action, I wanted to very quickly touch on the Super Guppy indicator over here for Bitcoin. And the reason why is I wanted to outline within this downtrend that we've had since the all-time high at 69,000, how many times have we broken above the Super Guppy over here to create a little bit of a bullish environment where everybody thought things were changing, and then it flipped. So if you look over here, I want you to notice some of the similarities, right? So here's a couple of times that you managed to close above, but I want you to also note how much time we managed to spend above there before breaking back down. So over here, we have 1, 2, 3, and then pretty much we went straight back down. So we held 3 days above, and then on the 4th day, we went straight back down. So that's 3. In this section over here, nothing over here. Pretty much you can't even give that. It started to turn gray, went down. Here we have 1 day and it went straight back down. Here we currently sitting on 1 day. What I'm trying to put across over here is this is where you need to be super careful. I did mention that once you start to clear this area and hold above there, and that's the key point, you need to clear and hold. If you can hold multiple days above here, I would say even potentially a week above here, this will have a chance to start to flip green, and then you start to establish a new bull run. So what? Maybe you get in at $22,000 as opposed to $20,700, but you know that you have a rock solid, safe entry, establishing a brand new uptrend, and the DXY is broken down. Everything has completely changed. So we're not at that phase yet, and that is what I would be waiting for personally as a long-term investor. Short-term trades, we've been playing the long side since last week, Friday. So I definitely think that we've capitalized on that. Now it's time to be a little bit more defensive. Today might be the last day of bullish price action, and then I expect some sort of a pullback, which could come at any moment. The other thing that I wanted to touch on, which I forgot to mention yesterday, and I had it planned, was the VIX, the volatility indicator for the S&P 500. So take a look at that. We had the risk line over here. Anytime that you fall below, technically risk on assets rally. And technically, whenever you're above this area, risk on assets tend to sell off. And we broke down that supporting trend line over there. We have made, similar to the DXY, a lower high. We now also have a confirmed lower low. But if you have a look over here, you're coming straight into the 200-day moving average, which I do expect a little bit of a reaction off of, in exactly the same way that I expect a bit of a reaction off the DXY, which is why I think now is possibly time to become a bit defensive. The other reason is the 10-year yield. And the 10-year yield is also coming into its area of support over here, as well as its diagonal support. And you can see it's already bouncing slightly off of that zone. If you start to close underneath this level, then picture starts to change, and maybe we can start to flip bullish and at least go into a mini bull run in the short term. Okay. Here we're looking at our chart with the moving averages. Moving averages are highly important for establishing new trends. As you can see, they are crossing to the upside, which is a great sign. You have the 12 above the 24 moving average. So the yellow is the 12 exponential moving average. And then you have the pink or the red, whatever color you want to call that, 24. So what typically happens is when you have these moving average crosses or exponential moving average crosses, price will usually pull back into those crosses like a magnet, which is why I would really encourage you not to FOMO into any trades. Sit on your hands and be patient. If you have missed the trade, if you missed the longs, there will be an opportunity. What you would expect to see is maybe something like this, a little push above the range, deviation back below, and then it will catch those moving averages. And then this is where the real question comes into play. Do we bounce from here and make another higher low, as we have been within these zones? We got 1, we got 2, and then we'd be looking for the third higher low. Now, that would be your opportunity to buy. Now is not really an opportunity to buy, in my personal opinion. It's definitely not for the mid or long term. Short term, great. You're trading probably like the 15-minute chart. Go for it. You can do what you want. But I'm talking to the long-term traders. Now, one thing I want to be cautious of when the dollar does, or if the dollar bounces, because we can't say when, if the dollar does bounce from that level, if the 10-year yield bounces from that level, if the VIX also starts to spike up, what is this RSI going to do on the daily? This has come straight through this level. It's broken the trend line over here. But I want to see if this is going to end up being some sort of a trap, if it's going to have an aggressive sell-off to the downside and bring momentum straight back, because this is attempting to get into that bullish control zone now. And sometimes the RSI doesn't get into the bullish control zone the first time. You may see that as it tries to get into the 70 region, it starts to reject from there and turn straight back over and then head straight back towards the bear zone. And while simultaneously price could create some sort of a tower top picture like this, tower top meaning it goes straight up, you go a bit sideways, 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 and then you just roll over and you go straight back down. So that is the bearish scenario of what you need to be cautious of, because every other time, as I've shown you on the Super Guppy indicator, it has been a trap. So with that being said, a little bit of patience exercised will take you a long way. Now, I wanted to quickly touch on the potential upside targets on Bitcoin if it were to continue on this trajectory. It does already look like it's rolling over. However, in my experience, what I found is that the early shorts usually get wrecked, and I think a lot of people have been jumping into shorts. Now, what you typically see is something like this with price action. When you have these massive impulsive moves to the upside, you typically see a little bit of consolidation, and then it just creates a bull flag. Do you see that? Looks like a flag, and then it gets sent up one more time. And that is something that I don't rule out. I think there's a high probability of this happening, and that would finish the liquidity grab or capturing the inefficiency. I've outlined the red zone over here is where I think the most likely area is that price would fade from. So I told you guys yesterday, anywhere between about 21,000 and 21,500, which comes into this zone. But when I re-looked at, I think this is a bigger area of interest. I'll definitely have taken all of my long positions off by the time we come into this 21.5 zone, but I don't rule out getting a little bit higher to almost $22,000, and then that is definitely where I expect a rejection. As you can see, stochastic RSIs are rolling over. Let's take a look at it on the daily. Daily is still trending up and reaching. Let's see 12-hour. 12-hour is slowly starting to turn. Let's go on 2-hour to see in the shorter term. See coming down, might bounce from this region and get the dailies up a little bit higher over there. Let's see in the hourly. The hourly will play out over today. Angle down, I also think it still could turn up. That's why it's a little bit of a dangerous place at the moment to be going long, in my opinion, unless you're a short-term trader. So Ethereum, what about Ethereum? To see Ethereum's similarities over here, Ethereum is coming into its 0.5 fib retracement level, which also happens to be the mid-range of this overall range over here. That is 1,593. I do think that it's possible it could spike a little bit more if Bitcoin does. And the area of interest that I have is the 0618 coming in at $1,696. That also happens to be a key horizontal, and it will match with its inefficiency over here. So keep an eye on that. I'm not telling you to long any of that. Now, I wanted to touch on one or two more things. And when markets begin to trend, what I typically look at is the way that I trade in a trending market. So we've mostly been in a ranging market, but when you're in a proper bull run or in the start or middle of a bear market, I like to use the 50 and 200 exponential moving average, which is what I have on here. And as you can see, they are starting to cross to the upside. But with that being said, because it's been a ranging market, you've had many, many false signals, up, down, up, down. They've been all over the place. So once you start to break major structure, meaning about $23,000 on Bitcoin, assuming that happens, you see the cross that's taking place here. In my experience, almost 80-90% of the time, there is a strong pullback directly into those moving averages. So it would look something like this. Imagine the moving averages are starting to trend up like that. Price has gotten higher. Price made it all the way up to about 23,000. You absolutely panicking. You think, oh my word, Kyle wrecked me. I'm missing the bull run. It's over. You FOMO in right over here. And this almost always pulls directly back into that cross. And then you have an opportunity to bid over there, stop loss below, and then the new bull run begins. And that's why I have no fear that I'm going to miss out any bull runs. Guys, be patient, calm down. I know I read the chats and the comments and everything, and I can see that a lot of people, the sentiment feels like it's at like 99 bullishness at the moment. It's absolutely crazy. It blows my mind. Just be patient. Let price action show you what it really wants to do if we are going to break any major structure. I think that brings us towards the end. Last thing I'll touch on is the BBWP. You can see on the 4-hour chart, we are starting to print red, meaning that the upside from here is becoming very, very limited. There are a lot of short trades that are lining up. I didn't drop them in the group yesterday because on the Discord, because I don't think they're relevant yet. There's a little bit, potentially a little bit more upside before a major breakdown. Matic, I'm still looking at as one of the primary ones that I'd love to go short on, and that's going to be about around $1 to 105. I am willing to enter earlier if it proves to me that I should do so. So I think that brings us to the end. Thank you all very much for your time. I appreciate each and every one of you. Do me a massive favor. Oh, let me just pause that. Do me a massive favor. Give this video a like. Hit the bell notification and subscribe to the channel if you're not already. And if you do still wish to join the trading competition where you can sharpen your skills in this type of environment, it also helps to take the edge off of FOMO because you can participate with a smaller account of $250. The links are below, and you'll need a trading account. Feel free to use any one of mine. You lose nothing. You actually gain something. You get sign-up bonuses, and it gives me a small boost. So with that being said, guys, thank you for your time. I appreciate you all, and I will see you all on tomorrow's video. Cheers for now.